Okay, good afternoon, everyone. Thank you for being here this Tuesday with another of a great webinars on this time chart of account with Katie Otto. So thank you for being here one more time, Katie, with us and with our small businesses. I just want to remind everyone who doesn't hear a lot about MBDA. So we support small businesses in all aspects, like one-on-one consulting. We support with access to contracts, capital, access to markets. So please reach out. And plus, this time is not for always, but this time throughout end of July, we will give in free professional service away. So like accounting services and consulting, HR consulting, video creation, social media marketing. So those are a few that I can name off. So please reach out to me if you're interested on any of these services. Just send me an email, or Sandra. We also have Sandra here in floor. So you can put your email, Sandra, on the chat, so our small businesses can reach out to us. So please, Katie, you can take it away from here.
All right. Thank you very much, guys. I appreciate you having me back. I'm going to go ahead and share my presentation. Okay. All right. So hopefully everybody can see my screen. All right. So today is part of our bookkeeping best practices series with the MBDA. We are going to talk about a chart of accounts. And the reason I picked this topic is because I have a lot of clients asking me about their chart of accounts to explain what it is, why we have it, and what it really means to the individual business and to the business owner. So today, that's what we're going to talk about is chart of accounts. If you haven't been in one of my sessions before, my name is Kate Otto. I own Otto Financial Services. One of the services that we provide to small businesses is bookkeeping. We also teach small business owners how to manage their books by themselves. We work with a variety of industries, and we are dedicated to helping small business owners that may not be able to access the services of a professional bookkeeper, access those services and succeed in business. Okay. Going backwards, apparently. Sorry about that. Okay. So what is a chart of accounts? So the technical definition of a chart of accounts is a catalog of account names that we use to organize and to categorize a business's financial history. Okay. So what that means to you and to your business is that we are keeping things in sync with how other businesses are tracking their financial data across the board. We adhere to generally accepted accounting principles, or shortened is GAAP, and that allows us to appropriately track financial transactions across all types of businesses. There are 5 types of accounts in your chart of accounts. So the chart of accounts tracks income, expenses, assets, liabilities, and equity. And we're going to go detailed into what each of these types of accounts are and how that can apply to your business. Now, I'll be keeping an eye on the chat as well, and we may stop and give some information during the presentation. We may also wait for some of them until the end, but please feel free to put your questions in the chat as we go. So one of the questions that I get constantly from small business owners is there a standard chart of accounts? And the answer to that question, the short answer is no, there's not. Loosely, a chart of accounts needs to track these 5 types. Otherwise, there's a lot of leeway in terms of how you set up your chart of accounts and how you manage it with your business. But just loosely speaking, it has to track those 5 account types. And then there could be many, many, many sub accounts within those different 5 categories. Okay, so we're going to start with income. All right, so income accounts reflect revenue generated by the business from its operational activities. So that can be a lot of different activities, a lot of different types of income. Sales is a type of operational activity. Investing is a type of operational activity. There's a lot of different types of income that we can or will track in a small business. Okay. Examples of some of those account types, again, are sales, commissions, and interest, and that's commissions earned from providing a service or from selling a product, and interest earned. So that can be from investing activities that the business is engaged in. So if the business invests its money, gets a return on those investments, then that's going to be income from investment activities. The way that we treat different types of income is going to depend on how it was earned and what it is. So, for example, we treat sales income differently on the tax forms than we treat income from interest earned on investments. Okay. Now, depending on what your business looks like, you could have 5, 10, 15 different types of sales income accounts. Those of you who use QuickBooks may have customized your chart of accounts to track income based on the products you sell, the different products you sell, track income based on the different services that you provide. There's a ton of different ways to track income that's earned within a business. So if you don't have a chart of accounts set up, or if, let's say, maybe you just have a very generic or very broad reaching chart of accounts that you got from whoever set up your accounting system, or that you got from QuickBooks when you set it up originally, you may want to talk to your bookkeeping professional about how to track income appropriately for your business, or what the best way is for you to track income. Okay. Okay, so the next category, expenses. Expense accounts, the definition of an expense account: an expense is a cost that a business incurs in the course of running their operations. We use different criteria to determine the necessity of a business expense, whether it's under normal operating processes, but expense accounts can be vast. There can be a ton of expense accounts depending on the type of business and how it's managed. So some general expense accounts are rent, salaries or wages that the business is paying, taxes that the business has paid. That could be sales tax, that could be income tax, that could be various types of taxes. Vehicle expenses are another type of expense. And vehicle expenses is a very broad term. If you are, let's say you're a single member LLC, when you fill out your tax forms, you're going to break vehicle expenses down into quite a few subcategories. So those expense accounts can be just one expense account for vehicle expenses, or you can break them down into, fuel, repairs, parking, maintenance services, wash and tow services. There can vehicle insurance. There can be a lot of different vehicle expense accounts, sub accounts, if you will. in your chart of accounts. And when you're categorizing your expense transactions in your accounting system, you want to be very mindful of what type of expense and if it belongs to a sub account of a regular expense account. So that's something that if you're doing your own books, if you are having someone do your books, you want to be mindful of how that is taken care of for your business. All right. Okay, so our next account type is assets. Assets, a business asset rather, is an item of value owned by a company. This can be a tangible or an intangible item, okay? So an asset can be furniture, computers, it can be manufacturing equipment if you are in the manufacturing industry. It can be intellectual property. It can be something that your company created or thought up that isn't actually a tangible physical item. Assets are generally something that can generate cash, doesn't currently generate cash, right? It's not actual cash. It can generate cash flow in the future. It can reduce expenses from that cash flow, or it can improve sales. So let's say you have a patent for an item, let's say maybe manufacturing process or equipment. You may not have created that actual machine or process physically yet, but you own the rights to create that. So if you have a patent on that idea, intellectual property, then you can utilize that to generate cash flow in the future. So in simple terms, it basically means that it's something that holds value. And you may not see the value currently, but you can utilize that value later on in your business to improve or grow your business. Lots of us with small businesses own computers, furniture. Those things cost us a certain amount when we purchase them. Generally, those don't appreciate in value. They depreciate, so they lose value over time. And periodically, we can take a credit towards that loss of value when we file our taxes. So knowing the value and tracking the value of your assets can be really important to your business. And if you have an accounting system already set up, let's say you use QuickBooks, you can track the value of those assets in your QuickBooks account. Some assets, depending on the type of asset, we categorize assets as either current, fixed, financial, or intangible assets. So depending on the type of asset that you have, we would categorize it as accounting professionals into one of those categories, and that would determine how we track the value and any depreciation of that asset. And I realize I'm speaking a lot of this in accountant speak. So if there are any questions about any of these terms, please feel free to put those questions in the chat, because I realize that especially assets, also liabilities, can be very complex. And most of us do not go into business fully understanding a lot of this terminology. Okay, so I think that that's pretty good on assets. So we will move on. The next type of account is liabilities. And I'm going to spend a little bit of time on liabilities, because liabilities can be a lot of different things. Okay, so the technical definition of liabilities is the legal debts that a company owes to third-party creditors. So That can be loans that the business takes out, so notes payable. Also payroll that is owed but has not been paid to the respective employees yet. That's a liability. Lines of credit. So a note payable and a line of credit are a little bit different. A note payable is a fixed loan, just a set amount of a loan that you take out for your business and you pay back over a period of time, probably a set period of time. Usually it's a certain number of months that has been determined before you take out the loan. A line of credit can be a revolving line of credit or a credit card. It can be something that you utilize once, pay it down, and then utilize it again. And you can do that over and over with lines of credit. So where a note payable or a loan is a certain amount that you're borrowing and paying back over a set amount of time, and you know how much that is, you know how much that liability is. A line of credit can be a certain amount at one point, paid down to whatever threshold, and then charged up again. And then you can owe an additional amount based on additional spending. So lines of credit are constantly changing if you're utilizing a revolving line of credit. We split up loans and lines of credit into current liabilities and long-term liabilities. So if you take out a quick 90-day loan to just get some cash into your business, okay, that's a current liability. You're going to pay that off within the year, and it will not show up on your long-term financial statements. A long-term liability is something that you're going to pay off over a period of time, like a mortgage, over a period of years. So you'll see, and when we get to our financial statements here in a minute, you will see that there's a difference in the way that we track in your chart of accounts a short-term liability or current liability versus a long-term liability. And that's typically decided based on how fast the liability will be paid off. Okay. Okay. And then we have equity accounts. So technical description of equity, business equity represents the total number of shares a company's investors own, or the funds the shareholders would have if the company paid off its debts and liquidated its assets. So if you are a single member LLC or a sole proprietor, the money that you have put into your business is owner's equity or owner's contribution, okay? The money you take out of your business, owner's pay or owner's draw or personal expenses, that is also equity. That's what we call a contra account, meaning that it depletes the balance of a certain type of account. So owner's contribution adds money into that equity account. Owner's pay or owner's draw removes money from the account. So when you're determining the equity in your business, the money you put into it, so let's say your startup money, the money you put into it when you began your business, that's equity. And then if you continue to put money into your business, that increases your owner's equity. And then money that you take out of your business reduces the equity, right? So those are both equity accounts. They just do different, they have different functions within the business. And retained earnings. So when you look at your balance sheet and you see that retained earnings, that is money that has been kept in your business. And that's also an equity account. Now, the types of accounts that we've gone over have different places on your financial statements. So the point, so what does this mean to you, right? That's the question, is all of this accountant speak, all of this information that I'm giving you, what does that actually mean to a small business owner, and why do we care as small business owners? So the two main reasons that we really care: financial statements. So your chart of accounts feeds your financial statements. The way that we populate financial statements. Oh, somebody wants to see the last screen. We're going to pause real quick. This screen? Grace, is that the screen you wanted to see? That went all the way back for me. Okay. Assets, liabilities, equity. There we go. Okay, so I'm going to explain this, and then we'll go back to the other screen while Grace is catching up. The reason that we populate all of this information is to fill out our financial statements. So most of you have probably seen these three statements at some point in your business, whether you've just recently started your business or you've been in business for years. These are the three most common financial statements that we use in order to track, to identify how our businesses are doing and where we're at, and then also to complete our annual tax filings. So we group all of these account types into specific statements. So an income statement, a lot of you've probably heard this called a profit and loss, or a P&L. An income statement and a P&L are the same thing. They're just called different things depending on who you talk to. So your income statement, or your P&L, encompasses all of your income accounts. Okay, so all of your revenue and your expenses. Okay, and that determines profit. So all of the line items on your P&L and on your, or if you call it an income statement, at the top, you're going to have your income or revenue accounts from sales activities. Then underneath that, you're going to have expense accounts in a specific order based on how they go on the tax forms. And then at the bottom of the P&L or the income statement, you'll also have some additional income accounts depending on how your accountant or bookkeeper set up your books. And those are different types of income, like your interest income, if you get bank rewards or some sort of cash back, also income from other things besides sales, like if you have an insurance payout of some sort. Those kinds of income accounts are going to appear at the bottom of your P&L or your income statement. But at the bottom, so you get your net income at the bottom of your P&L or your income statement, and that translates directly into the next form, which is our balance sheet. And our balance sheet is going to show assets, liabilities, and equity. And in that order, okay? It's very specific, and they are all in the same order. So at the top of your balance sheet, you have all of your assets, including bank accounts. So any fixed assets or tangible or intangible assets that you have recorded in your books are going to appear at the top of your balance sheet. Also, your bank accounts are going to appear there. So you may see at the very top of your balance sheet, you may see bank checking, savings, any cash accounts that you have for your business. Okay. Underneath that, you're going to have liabilities. Liabilities, again, are going to be debts that your business owes. So your balance sheet will show you any notes that your business has outstanding. So any loans, lines of credit, credit cards. If any of you have any of the SBA loans or any of the pandemic loan types, those are going to appear in your liability section. Also payroll liabilities, payroll that has been performed, work that was performed, but the payroll payment has not been paid to the employees yet. That will also appear in your liabilities section. And then equity. Again, equity is owner's investment for a lot of us that have single member LLCs or partnerships or even sole proprietor operations. You'll have the money that you put into your business, the money that you've taken out of your business, and your retained earnings. And so those are going to be in your equity section of your balance sheet. Okay. And then your cash flow statement. Now, a lot of my small business owners do not regularly pull a cash flow statement. A cash flow statement is a specific snapshot of the flow of cash, basically. So money that comes in from operations, money that comes in from investing, and then money that goes out or comes in from financing activities. So if your business is owed money from financing activities, so that would be if, let's say, you issue payment terms to your clients, your accounts receivable accounts are going to be in your financing activities. So that's a statement that your tax person may frequently ask for around this time. Most of us are either finishing up our taxes or getting ready to file, depending on your business structure. So these are really important statements to know for your business. So I challenge you, if you have an accounting system, to find out how to pull those reports, to look at those reports and see where your business stands. This is a great time of year at the beginning of the year, also to pull comparison financials. So you can pull a comparison report that shows what you did in 2022 versus what you did in 2023. And coming up towards tax filing time, it's a good idea to see how your business improved or didn't improve over the last year. So if you have not familiarized yourself with those statements, that's really where that chart of accounts goes into, is to generate those statements for us. All right. Okay. The other reason that we really care about the chart of accounts is because of tax forms. I get a lot of clients who either set up their own books or just kind of used a template that came with their accounting software, which is fine. That's totally acceptable. And we all have to start somewhere with some sort of template or some sort of advice on how to do what we're doing. But as your business grows, you may change the way that you track some of these accounts to fit the operating of your business and how your business chooses to view this information, or how your accountant wants to see it. I get clients who will have accounts because there's no standard chart of accounts that you can say everyone has to use this across the board. Okay. So because there's a lot of variation in a chart of accounts and how those accounts are tracked, there's a lot of variation in financial statements, specifically the profit and loss or the income statement. So when you give your financial statements to your tax person around this time every year, a lot of the fields on those financial statements feed directly into the tax forms that your tax preparer or CPA is going to prepare for you. Sometimes they flow right down the line, A through Z, right? And so depending on who you're working with for taxes, you may change some of your chart of accounts to fit how they prefer or how they know how to complete the tax forms. And this happens a lot. I'm going to give you an example. There's a space on the Schedule C. The Schedule C is a form that you add to your taxes if you're a single member LLC or a sole proprietor, okay? So on the Schedule C, there's a space for professional services. Professional services can encompass a lot, okay? Typically on a chart of accounts, you'll have under professional services, you'll have things like attorney's fees, accounting fees. If you have a bookkeeper, bookkeeping services go under there as well. But there's some new ones. Recently, technology has evolved, and a lot of us have answering services, or if you have a registered agent to manage the mail, the formal or state mail for your business, that's also a professional service. So in some chart of accounts, they break that down into those 4 different categories or however many categories. In some chart of accounts, it's just one line, professional fees, and that's okay too. It's very much dependent upon what you as the business owner and what your tax professional want to see and to understand. And that can be broken down simply because you want to know how much you pay your attorney versus how much you pay your accountant. And it's not necessarily required for the tax forms, but it's something that you would like to see in your business and you'd like to be visible on your financial statements. So it can be very customized to the type of business. And as long as it's grouped into those 5 account types and the account types are chosen correctly, then there's a lot of customization that can happen there. The tax forms generally will flow very similarly to your P&L or your income statement. And that's why we ask you for all of those categories. If you're new to business, and let's say maybe you didn't have an accounting system your first year or your first couple of years, maybe you had a spreadsheet that you created or got from somebody else, or maybe you just saved receipts and you piled them in different piles based on the type of expense they were. I see that a lot. That's totally fine. The reason that we ask for very specific categories is because some of those categories are tax deductible for your business. And so maximizing the correct deductions for your business and making sure that you're paying taxes accurately is a very big goal, right, within the accounting community and tax preparers. And so we want to make sure that we're categorizing those correctly. And so putting them in the correct account is how we accomplish that. And also making your tax preparer's life just a little bit easier doesn't hurt. If you look at your P&L and you ever wonder what your tax preparer is looking at when they plug in those numbers on your tax return, it flows almost line by line down the profit and loss statement or the income statement. So it's very easy to make sure that the information is accurate and that it is in the tax forms correctly. Okay, do we have any questions about what we've covered so far? Not seeing anything else in the chat. Have I put all of you to sleep? Okay. Okay, so that is, oh, okay, Ken's here. Hi, Ken. Grace is still awake. Very cool. Okay, so that's all I have for my presentation, but I'd love to talk to you about what kinds of questions you have about your chart of accounts. Does anybody want to volunteer where they got their chart of accounts? Did your CPA set it up? Did you download it off the internet? Did QuickBooks give it to you when you signed up for your subscription? I'm curious the different types of businesses that we have on our call today. Excel worksheets. Okay. I work with a business advisor. Oh, many questions. I would love to hear some of them. As far as the Excel spreadsheets go, you can do a lot with Excel. And as long as you have your basic categories right, so I'm going to go back here for a second. If you're trying to make your own profit and loss statement with income and expenses on a spreadsheet, you can do a really good job. I have some clients that are amazing with Excel or Google Sheets or whatever program you prefer to track on. As long as you have the basic categories down, who said that? Becky. Becky, as long as you have the basic categories down, you really can do a lot with Excel. The problem comes in, and where I see clients struggle is once the volume of transactions gets too high for the business owner to keep track of it, then it may be time to move on to something else. But if you're keeping your income tracked and then you have your expenses grouped correctly, right? As long as it is an expense account, then you shouldn't have any problems. The big problem there is usually growth. There's a lot you can do with an Excel sheet, but it may require more work from you as your business gets bigger. But yeah, Excel, you can do a ton of really cool things. I actually have an Excel sheet that I use for my 1099 freelancers that I work with that gives you just a basic P&L and plugs in all the basic categories, and clients use it from their statements or from their receipt stacks all year. And so that's something you can really do a lot if you're trying to save some money in your business. You can do a lot with a spreadsheet. Many questions. I'm interested what those questions are. I'd love to hear a couple of them. Grace is working on starting up her business. That's exciting. And Becky has QuickBooks but can't figure it out. Okay, this is a little bit off topic, but I will tell you guys, I teach QuickBooks for a local nonprofit as well. And QuickBooks is kind of marketed as plug and play, and it's just really not. So to save yourself some headache, Becky, you may want to consult somebody who's a professional in QuickBooks setups, and they can help you get started on the right track and maybe even teach you how to use it so that you're not struggling. Once you're set up correctly and you have a basic understanding of how to use the program, it can be very easy to manage, very easy. So I hope that that helps you.
Can I talk? Hello.
Hi.
Yes, hi. How are you? I have one question. I have established a company in New Mexico, but I live in California, and still I have not taken any EIN number. I'm a little confused because my business is going to be exported, so exporting the products. So I have heard that the New Mexico is a little tax free, and or between two other countries that are not, for example, in US. And I need to know if I, because I registered through the registered agent, if I take the EIN and also the bank account with the address of California, is it necessary that I pay the franchise fee of the California, or because my company established in New Mexico and there is nothing with California, I don't need to pay the franchise fee, but it is okay that I give the address of my California to open bank account. I'm a little confused for this. And also I need to know if it is not any importing, just exporting, and the source of money is overseas. So is it necessary to give the quarter report or yearly report, or for example tax filing per year, or not? Can you reply me, or it is too much?
So the franchise tax fee is actually specific to California. I know that because I have clients in California and I work within that state as well. That is not something that we have here. So that's really a business decision that you want to talk to your business attorney or your CPA about, whether or not to move your business from one state to another. Generally speaking, if you're operating in one state and you have moved to that state, you generally want to dissolve the old business and start the business in the new state. But I would strongly suggest talking to your legal advisor or your CPA about that.
Okay.
As far as taxes related to import and export, I apologize. I am not an expert in tax relating to the import or export of products. Strongly recommend talking to whoever handles your taxes about that. You want to have a plan, even if you've just started your business, you want to have a plan in place to make sure that you are filing whatever is required on time, and that you know what's required of you. So it's not a question I can answer here specifically in this chart of accounts training, but I would definitely reach out to whoever handles your taxes and whoever handled your business formation to find out the next steps on those, for sure.
Okay, thank you so much.
Yes, ma'am. Yeah, and if anybody, Sophia just put it in the chat, if anybody's interested in coming and sitting down with us and going through, specific questions to your business, having us take a look at your current processes to see if we can make some suggestions for implementation, for, better ways to do things, we're happy to do that. MBDA pays for that for you, so that makes our services free to you, which is really exciting. We also, just so everybody here knows, we start out with a little call as well that we throw in just to kind of talk about, make a list of what your concerns are so that we know what to do with your 2 hours. We can maximize your time. Somebody raised their hand. I don't know how to see raised hands. Sorry, guys. Please feel free to ask your question. Okay, Grace, Sophia can help hook us up and we can get your contact information and set up a time for us to meet.
Yeah, I didn't see a raise hand either, so that's weird.
Well, whoever raised their hand, we would love to hear from you if you still have a question. All right. Anybody else? Grace, I'm going back because I didn't quite read your last comment, so I'm just going back and reading that. Grace, do you mind if I ask, did you start your business this year? Okay, great. So thanks for sharing that. One tip that I give new business owners, the first quarter of the year, which we're in right now, is a great time to put all of these processes in place. The reason that is because there's not a lot of cleanup work to do. So there's not a lot of homework that you have to do to get your accounting system on board and go back to the beginning of the year. Also, if you started your business this year, you don't have to do any catch-up work from prior years. So you don't have to take any data from last year or the year before, put it into your new accounting system. If you think you're ready to make that step and set up an accounting system, whatever that is for your business, this is a great time of year to do it. Keeping in mind that most of us tax preparers and bookkeepers and accountants are very busy right now until at least April 15th because of tax season. Beyond that, for some of us that do a lot of extension filing. So just keep in mind, if you're reaching out to your tax professional or to your bookkeeping or accounting professional, it may not be an immediate response that you get, but we can absolutely help you work through that when you're ready to set it up. But the beginning of the year is a great time to start. All right, anybody else? Okay, after the 2 free hours, what are the fees? That's a great question, Joe. And I think you're the one who had your hand up earlier, if I'm not mistaken. It just flashed on my screen and then went away. So depending on what our current hourly rates are after that. My firm, it specifically is hourly. We don't do package pricing, which makes us a little bit more affordable for some of the small business owners. We also do a lot of packages for setup, not for bookkeeping, but for setup. So you and I can absolutely discuss what that looks like for you after your free hours, if that's something that you were wanting to pursue. You know, 2 free hours with me, I talk really fast. We can get a lot done in 2 hours. So if you feel like you need some help, if you feel like you have some questions that you're not comfortable asking over here on the chat, or maybe they're just too detailed to ask in this forum, we're happy to go over those with you. And excuse me, the free hours that MBDA provides its clients is, I mean, honestly, pretty amazing. We work with a lot of nonprofits and agencies in my firm, and that's the best deal out of any of my agencies or nonprofits. So it's a really great gift that the agency is able to give. Yeah, you're very welcome. Okay. Yeah, Becky, you're very welcome. Thanks for participating. We got 10 minutes left. You guys have any other questions? Thanks, Ken. You're so nice. All right.
Right. Well, I think that we don't have more questions. Thank you so much, Kay. Always an amazing presentation. So yes, please just feel free to reach out to me. I put my email in the chat so people can send me an email. And I can get the start as of a good 2 hours there with Kay. So, well, thank you so much again, Kay, to everyone is here, to our small businesses, and have a great rest of your day.
Thank you.